Hello, and welcome to our next NAP. NAP stands for Nonprofit Auditor Points, and I'm Irina Ryshkova, your nonprofit auditor. Today, I want to talk about proper terminology used for revenue accounts. Revenue is one of the most complicated areas for nonprofits, primarily because it's governed by two different standards. There are many revenue accounts in nonprofits, but they are governed either by earned revenue standard or contributions, donations, and grants. Or other word we can use for them are gifts. So let's see what the proper terminology we need to use. The reason why I do believe the proper terminology is critical because it shows the understanding of the revenue and how it needs to be presented on your financial statements. These revenues have different sources and needs to be accounted differently. The first type of revenue, it's earned revenue, or another word for that is exchange transaction. And we all know exchange transactions based on our personal life and experiences. If we go to grocery store and we pay $50 for groceries, we exchange $50 for grocery. It's exchange transaction. We're paying $50 and we receive groceries. If we're hiring a moving company to move our stuff, we're paying $1,000 and moving company moving our stuff. We exchanging $1,000 for the service. So this is exchange transaction. The person who pay for the services or goods is benefits from that payment. Revenue recognition for these type of revenue is recognized when the services or goods are delivered or performed. And this type of revenue cannot be restricted or conditioned. Again, let's take a look. When I pay $50 for groceries, I gave to clerk $50. I release full control of this money. I cannot put any restrictions how this money can be spent. I already got my services or goods, and I have no business dictating how recipient will use my $50. This is one type of revenue called earned revenue or fee for service or exchange transaction. And again, we cannot use terminology such as restricted or unrestricted for exchange transactions. It's just not applicable here. Nonprofits have another type of revenue. We can call it gifts. It can be donations, contributions, grants. Uniqueness of that type of revenue, that entity that pays to a nonprofit is not recipient of the benefits. Recipient of the benefits is somebody else. In this case, if I'm a donor and I give donation to a nonprofit, so nonprofit can actually run a shelter. I'm not a beneficiary, or I'm not going to benefit from my payment. It's just a simple donation to nonprofit. Then nonprofit can have to follow my wishes, what I'm attaching to that donation, and my wishes can come in the form of restriction. Restrictions can be either by purpose or by time. For example, I will give my money to a nonprofit saying you can use it only for shelter services in Oakland area. I restricted it geographically. It means that nonprofit, by accepting my donation, have to follow the strings attached. I also can say I want nonprofit to use this money during the period of 3 years. So I put a time restriction So meaning that nonprofit have to follow and spend this money in 3 years. To conclude, exchange transaction, when I'm a beneficiary of the services and I'm paying for the services, exchange cannot be restricted. So therefore they cannot come with donor restrictions, because I'm not a donor. I'm actually receiving services because it's a contract. In grants, recipient of the benefits, it's somebody else, not the entity that pays for the service. In this case, I'm a donor and I can put a restriction, time or purpose on this donation. Therefore, it can be with donor restriction or without a donor restriction. Sometimes nonprofit receive government's grants. There are grants because government are not recipient of the services. Government is paying to provide services to public, members of the public. But the grant is structured that it's expense reimbursement basis, meaning that nonprofit need to spend money and then apply for reimbursement. It's still grant. It just conditioned upon nonprofit to spend money according to budget and then apply for reimbursement. It's a grant. It's not earned revenue. It's still a grant, but it's conditioned until nonprofit spends money. We need to be very carefully and understand the difference between fee for service, which is exchange transaction, and expense reimbursement grant, which is not an exchange transaction, because the recipient of the service is not the entity that paying for the services. Why it's very critical? Because grant revenue and exchange transaction governed by various different standards. They're reported differently. And as I mentioned before, when it's exchange transaction, the person or entity that pays for the service cannot put any strings, any condition. It's a free from any attachments money. Money that come from expense reimbursement, can be with donor restrictions or without the donor restrictions, and they are considered a grants. Therefore, every nonprofit needs to make sure that it has a proper terminology of revenue accounts in their chart of accounts that indicate foundational grants, contributions unrestricted, contributions with donor restrictions, fee for service, and so forth. And do not commingle or confuse exchange transaction and non-exchange transactions. Hopefully that was useful. Thank you so much. Looking forward to see you for the next nap. Have a wonderful day.